Hello, everyone. Hope you are doing great. Hope you survived the market conditions today. As expected, it was full of traps. It went up, it came back down, it tried going back up again, and then finally it dumped down. So let us quickly take a look at what happened, and I would show you how similar structures form in the market on a regular basis, and how they succeed or how they fail, right? So let us start. So we this was our bar one at 9:30 in the morning. Now, I did not want to go long here because this was where we closed yesterday. We had a big gap up. This was the 20 EMA, which was pretty far at that point of time. So there was no point in going long here. Rather, I was actually watching this double bottom to hold when this came down. I did not want to short either because we were inherently in a long market, right? And I was thinking that we will go and touch somewhere around 4350 area, and before, and then we can dump below. And on top of that, the other thing that I had was the ETH chart, right? So on the ETH 5 minutes chart, this was this was our 8:30 news bar, right? So I was thinking that if this low at least does not break down properly below the news bar, then we may not get a very good move down. And see, once that happened, this was the whole thing that we saw. This whole resistance area, bears came in again, and we dropped the market. Right. So going back here, once we saw this bar, this is where I went long, right? Because I was waiting for it to close above bar two, and I went long here, and then I was counting how many points do bulls get from here, because I considered that most of the market will enter here, especially if you see this candle open is gapped up, right? So as this candle open gapped up, this I was pretty sure that this is going to hold for pretty quite some time. And then I was doing a measure of it. We came till 12 points above this. I did take some profit here, considering the 10 points from here, and we were almost getting 20 points from here. So I did take some profit here. And then the rest of my trades, the rest of my contracts, I came when we came below the midpoint of this candle. Right. We did not trade anything here, but then this created a pretty big body gap here, right? It's a bearish body gap. And since this is a bearish body gap, we could not cross over it. We came down here, but I was of the opinion that this gap will hold. So I drew this level here, and this is also the support that was getting created at this point. But I was still thinking that if we can close above this area, we may actually try to go up and reach the top of this candle number 25. But that did not happen. So I was in no trades at this point of time, because primary reason was, if you see this, we already had a wedge bottom here, right? We had this wedge bottom, and I did not want to short against this wedge bottom as long as I do not see anything. But when this failed to go above, I actually put a stop order here, and my first take profit was at the Globex low, and at the Globex low as well, I entered some longs, thinking that it may go up a little bit, but I just scalped at 34. It went up till 34, and I scalped there. And after that, it looked like it was coming down pretty far. This was the other wedge that it got created. But at that point, again, if you see on the hourly chart that I showed yesterday, that not on the hourly chart, on the 1 hour chart here. Yeah, so I said that this 2-5 area, I think this is the RTH session. Yeah, that is why. Yeah, so I said this 2-5 area will be a good support, and when that broke down, we came down another one, and I am still expecting that we will see this 1-3 level. Now, as I was saying yesterday, if you remember that these levels are stacked across each 100, right? So 5-2-1-3, then 5-3-1-3. So this is how the market is moving, right? So if we move through 5-3-1-3, we may come down to this candle also. And if we come down here, actually, I'm thinking we may very well go and retest our 7-4 area before we even think of a bounce. I mean, if you look here, we already have three candles on the bearish side. We do have a body gap created by the bears, and then we had a follow through. This was the pullback. If you see this candle went one tick above the previous candle, so this is the second leg. And if we consider the measured move of the first leg, we will see that 5304 is the area of target, right? Actually, the leg one ended here, right? So 5298, and if we come down to 5298 and we hold that area, we will very much come down to the 5374, and then we can have that TR actually between the top, the 33 area and the 5284 or 74 area. That can be a trading range that will be created, and maybe we will be in that trading range till next Wednesday when Powell is supposed to talk. The FOMC minutes of meetings are about to come out, right? So we will have to look at these different levels. We'll have to look at once this area breaks down. If we see this area breaks down, 5300 breaks down, we'll have to see what happens around this candle, right? So this is another support area that is there. This is a support area that is there. So this is something that we will have to keep an eye on, and then see. Yes, the following few days is going to be tricky. It's going to be a trading range. And I think most of the time the pressure will be on the downside, but you never know, bulls can come out of anywhere, right? I mean, they have done so much, they are not letting their hard work go away so soon. So even before the bears take out, there will be some kind of sideways movement. Market will be sideways. Market will be in a trading range for a few days, I think, before we break out. So although I expected this day either to be a inverted hammer or a doji or a bearish pin bar, and it gave pretty much more than that, right? So it is a good bearish day, and we can see that I think some people call this a kind of a bearish kicker. But yeah, again, one bear day in after 10 bull days, 11 bull days does not make any difference. Tomorrow we can just pick back up from here and go up and test the top and close a week that may be a climactic week actually. So if I go to the weekly chart here, and if you see, if we can close around this area tomorrow, this will be a super climactic week, and maybe we at that point of time I would think about that, okay, maybe one more week we'll try to go up. But till then, I do not think that is going to happen. That's a very unlikely scenario at this point, because if you see, as soon as we gave up the previous high here, or even the 55337, the highs that we created 2 days back, as soon as we gave that up, we started falling at a pretty steady pace. Okay, so I think if we draw all these channels here right now, if we can find out a channel, we are in a pretty good channel here, right? So I do not think that the first reversal, even if we find ourselves somewhere here, that will be a very good short opportunity to come down again to somewhere in this area. So I also wanted to show you guys a similarity in the structure that got formed today and how that failed against how that structure was successful the previous day. If you see, this is from Tuesday, right? This Tuesday. And we had a nice wedge bottom here, and then we went above the EMA. We held it here, and then we went above again, and then we did not turn back. We did not even touch the EMA till the end of the day, right? And that is how we went up again. Now, if you see, and before that, if you see, there was a lower low, there was a lower high, and then we came down. We had an exactly similar structure today. We had a lower low, we had a lower high, and then we came down. Then around this area, this is what we were thinking, that okay, this may be the wedge, right? We started going above the 20 EMA, but could not hold it, right? We had these two candles above the 20 EMA. We had two candles above the 20 EMA, but immediately the next one was another bearish bar from which we could not recover. So that is how I noticed that okay, this may not be the structure, the same structure, although it was looking the same, but the failure of the 20 EMA multiple times was telling me that okay, we are not going to hold it here. So the reason for showing this is look at the structures that are happening on your charts. Keep in mind the structures that are happening. Go and look back at those structures whenever you find time, and you will find those structures repeating again and again on the charts. Right. Okay. So that's it. I will post my levels on my Facebook page tonight, as well as on Discord. If you're not on the Facebook page or you're not on the Discord, the link to both of those will be given in the description below. And I will see you guys again tomorrow. Have a great rest of the evening. Bye.